Hello and welcome to the Trading Mindset Podcast. My name's Milton Fernandez, and on our podcast we look to talk to traders that have educated themselves to successfully trade the markets today. As you know, this can be a tough gig for anyone starting out, but we look to get inside the minds of these successful traders and understand the strategies that they use, the morning rituals or morning routines that they follow, and how they trade upon the economic news. We also have much more.
Hello, and my name is Louise Nonwheeler. I am the co-host of the Trading Mindset Podcast. I am a multi-award-winning clinical hypnotherapist and life coach, and I specialize in working with financial traders on their psychology of trading. In this podcast, we talk to traders about their emotions that they experience, the challenges that they face on a daily basis, and the techniques that they have used that have really helped them to get from where they are to becoming profitable traders.
Hello and welcome to another episode of the Trading Mindset Podcast. My name's Milton Fernandez and I'm joined by my Geordie-loving co-host, Dave O'Hagan. Dave, how you doing, buddy?
I'm good, Milton. How are you?
Yeah, very well, mate. Very well. How's the trading? What's been happening?
Trading's going very well. We've picked up some nice little trades today. We've been looking at the NAS. And we've not huge, but it's enough to keep us going today. So we're doing all right.
Good stuff. Good to hear. I haven't actually traded today, so I'm glad one of us is making money, mate. So Dave. Obviously, you've seen enough of the podcast now to understand that what we're doing here is just we're talking to traders to try and get inside the minds and of what it takes to be a successful trader. Now that's all well and good, but we're trying to mix things up here and sort of not just focus on just traders. And I think there's certain aspects that we need to look at, and one of them is tax, which leads me on to our next guest. So our next guest has worked in the accounting industry since completing his BA in accounting and finance at Manchester in 2014. Since then, he's opened up his own tax practice, and he holds multiple certifications, and he helps multiple UK companies and overseas individuals in managing their tax. So please welcome Simon Jacobs.
Thank you for having me on, Milton. Pleasure to be here.
Yeah, good stuff. So Simon, before we start getting into the nitty gritty of things, let's talk about yourself. I mean, how did you fall into the financing and accounting area? Was it something that you've always been interested in, or did you just fall into it by accident? How did that come about?
Well, Milton and Dave, the finance and accounting really started back when I was at university. I did a finance and accounting qualification. That came about because my father, he's a qualified accountant himself. He's been in the industry for well over 30 years now. And it's from there that he really got me interested in the finance and accounting. I would say that I've had a good thing with numbers, and from there I just decided to get into that space on the back of his recommendations. And then it was from there that going from university, studying it at uni, and then getting into one of the big four. I got into the big four where I started working, and it was from there that it just kind of fell onto my lap. Just getting into working at a big four, that almost fell into my lap. Certainly a lot of work from my end, but it was from there that it really started to take off.
Yeah, I mean, you've opened your own practice. I mean, was that a lot of work to get that up and running, or was that something, quite easy to set up?
That was certainly, like with a lot of things, it's the hard work at the beginning. And I remember when I set it up, I was really trying to find, like, where am I going to find clients? What am I going to do? I had just finished working at the accountancy firm that I was in, and I decided to set it up. And I thought, what am I going to do? That was really my first thought was, right, I got the idea to set up my own business in tax and accounting. what am I going to do? Who am I going to help? And it's been really 2 years of a lot of exploration, a lot of figuring things out. And I'd certainly say that I'm now like to be in a position where I've got a nice position of being able to help people in taxes, and really on the crypto side as well, because that's really an interesting area.
So Simon, where did the crypto side of things come from? Was it was it just your mates down the pub asking for advice, or was it just that you saw some sort of gap in the market and just thought, going to get into that?
Dave, no, it came about when a friend of mine, I remember back, it must have been in the late 2016, maybe even earlier, back when crypto and Bitcoin was, I remember he told me that he told me about a gentleman who bought some pizza for about 10,000 Bitcoin. And I remember when I heard that, and I go, I didn't know what Bitcoin was. I was like, you can pay for pizza with this digital currency? Like I couldn't quite understand how that all worked. And it was from watching him then telling me, he was getting more and more excited. He was saying, this guy bought bought pizza with 10,000 Bitcoin. Then there's suddenly the price of Bitcoin was going up. It was back at when it was like £500. Then it was going up to £700, £800. Everyone was really getting excited. And then I thought, well, what's going on? Let me explore this in a bit more detail. I wasn't paying too much attention with it. But then I was at work one day, and I was on one of the team meetings when I was working at a Big Four. And one of my directors in a tax team, he stood up in front of everyone at work, in front of about 100, 200 people. And he said, there's this new thing called cryptocurrency and blockchain. And I want to set something up. I want to help people and companies with their taxes involved in cryptocurrency. And I just remember hearing back my friend who was telling me about how Bitcoin was going up in price. And I thought, this could be quite an interesting area. And so I remember speaking with my director. We sat down, I had a conversation, and it was from there that really, I helped to set up that crypto tax team in my particular field at the company that I was working in. And then it was from there that really things started to pick up. And this was back in, I helped to set our team up in 2018. And I've really been in the field ever since.
And never looked back.
Never looked back. Absolutely.
Good stuff. I mean, Simon, obviously you help a lot of traders save money. Why is it such a great, for me personally, tax is such a grey area where I don't know enough about it. I don't know whether or not if it's really important when it comes to trading. I mean, how do you help people become more tax savvy and show them how to save money? I mean, is it hard? I mean, is it something that we could, easily pick up, or how can we, learn more about it?
It's a very good question. I mean, in the sense that there's a lot of tax that we've got is when you talk about tax, you think about, okay, the kind of the tax man coming after you and taking your hard-earned cash that you've got from your business, the money that's in your register, the sales registrar, or in these days when it's done through online, and it's still cash into the bank accounts. But crypto is a space where it's really quite new in the sense of a lot of people, especially HMRC, they're still trying to get their grips around it, trying to understand how it all works. I mean, unlike other taxes like income tax, per income tax and business tax, there's actual legislation. It's in the law about how to tax your income and how to tax any money that you make from selling property or other assets, such as the stock market. In crypto, they're still trying to figure it out because it's not regulated. the blockchain and the crypto space is not regulated, at least not at the moment in the UK. There's no specific specific legislation here. So when it comes to actually figuring out figuring out where to look for things, well, there's certainly the guidance from HMRC that they have published, but again, that's just guidance. It's not in the law. And then it's really, they're still figuring it out. So they've made a lot of changes over the last 5 years, still trying to figure out how the tax works. And it's really from just trying to keep abreast, from looking at HMRC and finding what crypto tax accountants are writing their guides. And then it's looking at that to try to make head and heels over it. But I understand that it can be very complicated because of that. It's just guidance at the moment. It's not legislation. And it's a big difference.
I mean, I always think of tax, whenever, I'm in Switzerland, so I have to fill out forms. For me, it's very daunting, just even looking at the form. I don't know. I mean, Dave, maybe you're the same as me, but I don't know. It's an area that which I really don't like indulging in.
It's a really interesting one, Nilton. I mean, you've come across a thing there. The conversation with Simon previously. I mean, I'm obviously moving now from being a business owner to being a trader, and if you look at the terminology around what the HMRC are saying to me, I'm moving from being sort of a speculative trader to a private investor. I mean, I don't agree with that title at all. And the sort of the question I've got for Simon is like, are you finding that with crypto? It doesn't seem to have a home yet, and you've talked about it being sort of not really sort of legislation. Do you think the rules and the laws are going to change around crypto in the coming years, Simon?
It's a really good point in that around that, Dave, is that certainly it's still quite up in the air, and HMRC, they're going to want to put their finger somewhere that they can recognize that there's a lot of crypto traders. Some of my clients have made some significant money from trading. Well, HMRC want to have, they want to put their fingers in the pie. They want to have this in law that certainly from this aspect for them, if they can have something in law that they could have they can have in legislation that it's quite black and white, then they can have a good amount of tax revenue. So for them, it's certainly in their interest. But where there certainly could face difficulty is because the crypto space is not regulated at the moment. There's no regulatory body like you have the FCA with the banks. There's nothing like that at the moment in the UK. And so that certainly makes it difficult with the legislation because there's no regulatory body to abide by the legislation that they would come by. And it's like, who is really where is the law in place for? Who's it for? So,
and just you find people are still surprised, Simon, when they realise that crypto is actually a taxable asset.
Absolutely. I'd certainly say that people are at the stage where, for them, there's still an element of, well, to some people they would think that it's more like gambling, and that there's still, because of how crypto assets have a very volatile in price. I mean, you can wake up this morning with the price of Bitcoin at £30,000. You can wake up tomorrow, or you can even turn on your laptop in the evening and the price of Bitcoin would be £40,000. And so it feels like you're almost gambling with Bitcoin and other cryptocurrencies. And so from an individual, from a trader, especially traders who are doing this regularly, for them, it might feel like it's gambling, and therefore it's kind of a risk that they're taking, high risk, high reward. So for them, they're like, well, gambling in the UK is you don't pay tax on gambling. So with this, people will go, okay, well, it's like gambling. I don't need to pay tax. Or maybe they might think it's like a currency, because you can use currency. And when you buy and sell currency, especially the Forex exchange, you don't pay tax on that. So people might look at that and go, okay, well, I can just make a lot of money and I don't have to pay tax on it. But then if they get a notification, because there's been a lot of notifications from Coinbase where they've been sending out letters, they've been notifying HMRC of people who've been making over £5,000, and then HMRC will send them a letter and go, by the way, and then people can get a bit of a wake-up call and go, and HMRC send a letter in the brown envelope. You wake up in the morning and you get this letter that says, by the way, you might have to pay tax on your cryptocurrency. And people go, hold on a second, this is new to me. And then they get a bit of a nasty surprise because they made a lot of money and they haven't prepared for paying tax on that.
And at what point, Simon, does it become taxable? Is it when it's converted back to fiat currency, or is it just as it sits in an account?
It becomes taxable. Certainly, that there's four main ways that cryptocurrency is taxed in the UK, in the sense of when it's taxed. So it's really when it's a disposal. So HMRC will consider that when you dispose of a crypto asset, that is when you then start. It's when it's taxable. By disposal, a disposal is a very. What does that actually mean? Is what people will wonder as well. What does disposal mean? So from HMRC, there's four main ways that you would then, where something is disposed of in relation to cryptocurrency. The first is when you actually sell it for fiat currency. So when you have, let's say, Bitcoin, and you go and sell it for GBP or for US dollar, at that point, it's a taxable event. The second would be when you actually use that cryptocurrency. Again, let's just say with Bitcoin, you buy Bitcoin and then you swap it for another cryptocurrency. So you swap it for Ethereum. At that point, that's also a taxable event. Thirdly is when you actually go and use it to buy and sell, goods or services. So if you, especially now, there's more vendors and more opportunities that you can actually use cryptocurrency to buy whatever it may be. Out here in Prague, you can actually buy coffee with your cryptocurrency. And so at that point, that's where it becomes a taxable event. And then finally, it's where you actually gift it to someone. So if you gift it to a family, if you gift it to someone else, if you gift it to charity, gift it to someone else, at that point as well, that's where it becomes a taxable event.
Well, okay. So, Simon, so how do you educate or tell your clients to best position themselves to allow them to save as much money as possible when it comes to crypto and disposing of the coin? What's your strategy behind that? How can traders take home the majority of their money instead of paying this tax?
I look at trading, specifically here around tax. I look at tax a bit like playing a game of chess, in the sense that you've got you as an individual, you are, let's say you are white, and you have your opponent, which is HMRC. And both of you, your goal is to try to take home as much of that. You want to have as much of that money, and HMRC also want to have that money from you as well. And so it's really how I look at it is it's like whoever can outsmart the other in that regard. If you as an individual, there's rules and legislation that HMRC have come up with that you need to abide by. That is the law. But there are things that you can do where within the law, because it should be within the law, is that you can do certain things that you can reduce your tax bill. And to me, that's like you're getting smarter than your opponent. It's like you're playing a better move on the chessboard than your opponent. And so it's like you're going to win the game. So some of the things that you can do, well, the first thing to note is when it comes to actually paying tax on cryptocurrency, is it also depends on what it's for. Like, it depends on what it's related to. So in most cases, as a as an investor to actually, so you first got to consider, well, whether you would actually be considered as trading or as an investor, because the tax on that is very different. Now, if you're a trader, so that means if you think of typical stock market, you're trading hundreds of times a day, then you're more likely to be considered as trading from HMRC's point of view. The consequence of that is you then pay income tax on that. Whereas if you have, and I'll talk more about that in terms of the tax element to it, but this is, having an understanding is certainly a crucial part. When it comes to, let's say, if you're not a trader, so if you're, let's say, trading, every other day, maybe one or twice a day, you're doing not that regularly, which is, I would say, about 90% of people. Even if you think you're a trader, unless you're doing a lot of trades, thousands of trades every day, then you'll most likely be considered as an investor. And the consequence of that is you would then pay capital gains on that. The real difference here is, as an individual, I mean, if you're paying income tax as a trader, you can be paying up to 45% tax on the gain that you make. But if you're an investor where you're doing it less regularly, you would pay 20%. And that also means that the tax that you can save on it's very different in terms of what you can do to offset the tax. So if I take with an investor, then, well, first of all, if you don't make over the annual exemption, you don't have to pay tax on that. So the annual exemption last year was £12,300. So if you make a gain of less than £12,300, you don't even need to think about tax, which for some people, if you're only dabbling into crypto, then that's not relevant. But when you're actually starting to make serious money, if you make over £12,300 in capital gains, then yes, what we would do is, well, one of the first things we'd look at is, well, does all of that crypto actually relate to in that particular tax year? So I had a client recently who was making 7 figures from his crypto. And he was worried he would have to pay about £200,000 in tax. And we looked at it and go, well, hold on a second. Not all of that relates to your current tax year. So yes, you have a tax bill, but you don't have to pay all of that at the moment, because not all of it relates to your current tax year. So only the stuff that you make in the tax year that you would need to pay tax on. And and the remainder, in terms of that, the money that you have from that capital gain, you can do into things like seed and enterprise investment schemes. That's one of the things that I recommend to clients is, well, you can put a proportion of that gain, and even with the income tax, you can put a proportion of that into the SEIS, into the seed enterprise investment scheme, and you can save tax on that.
I'm blown away here, Simon. You might be getting a phone. Your numbers of clients may be going up after this one.
I haven't even, Dave. I haven't. I mean, this is just some of it. I mean,
yeah.
I haven't even discussed things like business expenses.
Well, this is the thing. I mean, I'm in a position where I'm transitioning from being a business owner to being the sort of speculative trader that you've talked about, to being classed as essentially a private investor. I class myself as a trader, or I will. It's when this takes hold. But as you've said, I mean, I make 10 to 15 trades a day max, which in the eyes of HMRC puts me firmly as an investment sort of position. I mean, I've read the articles on LinkedIn that you've put on around crypto, around the minimise and tax bills and things like that. So I'll be giving them a good read again, and they are there for anybody who wants to see them. Are you seeing a big increase in demand for what you talk about and what you put in there, Simon? And are you seeing people are actually replacing their sort of traditional saving methods with crypto, so things like pensions and ISAs?
It's certainly an area that I would say it's personal preference. And what I mean by this is, for some people, the crypto, when you think about crypto, it's still a very volatile market. As we have found over the last year, the price of crypto has gone up and down. It's like a roller coaster, and you've got to have quite a stable heart to be to you got to have a stable mindset to look at that and put all of your money into crypto, and not have as much concern. I mean, it's a big risk that especially with some of these coins, especially the altcoins. You had the likes of the Dogecoin and Shibu and some of these coins where people were putting a lot of money into, and then suddenly the coins crashed and they lost their money. So putting all of the money into cryptocurrency, while there's people who would do that, I'd certainly say that the general, I've generally seen from a younger crowd are more interested in crypto, purely because the novelty of making money quickly, as you can do with some of these coins, is very appealing to a lot of people. But then when it comes to other individuals, certainly I'd say the majority of my clients are the younger, they're certainly in crypto, they're younger generation. But there's certainly, I do have clients who do get involved in crypto a little bit. But I'd say it's still early days in crypto. I mean, there's people talking about crypto going up to $1 million over the next 5 to 10 years. And whether that will happen, I mean, people can speculate. But if that is the case, if it does go up to 1 million, well, we might see more and more people getting involved in it as the price of crypto goes up, also depending on what governments are doing around the world. I mean, you've got El Salvador, they've just used it has used Bitcoin as a legal tender. So depending on what governments do, if they see Bitcoin and other cryptocurrencies as a future finance, well, that might see that a lot more people get interested in it, and then there's more demand, there's more interest, people put more money into it. So I'd certainly say it really, for a lot of people, is going to be depending on what governments do, depending on how they react to cryptocurrency, because certainly I'd certainly say that people make decisions based on what they read in the media, and how the media portray Bitcoin. I'd say it has a big influence on how people then trade and what they do. And from there, depending on how the media portray it, depending on how the government do, it could go one of two ways. Either people decide to get out of it and put their money into property, into other investments, or they look at it and decide to get into crypto more, especially if they see that the returns that they could make are significant. As I mentioned just before, if you can make 400% return on your investment in a very short period of time, that can be very appealing to a lot of people who go, all right, I'll put in a couple of $1,000, and if I can make 400% return on that, it's no biggie. And then they see that they can make good return, and then they put more money into it. So it's going to be a very exciting future, and
yeah,
it's going to be really interesting to see where it goes.
One of the questions that I had a friend contact me, and he was asking about how he can better preserve his money. And one of the things that I looked into for him was like trading ISAs. And I mean, they're tax efficient, right? I mean, what would be your thoughts behind them? Is that a good idea when trading cryptos? Is that something you can potentially tell your clients?
Well, crypto, I mean, ISAs in general, I mean, from that side, yes, they are. You have your £20,000 allowance every year that you can put into your ISA. Now, for that, that's linked to the stock market. So you've got, well, how are the stocks doing? How are they performing? And for some people, I mean, that can be a long-term investment. Now, I'm not a financial advisor now, but from what I've seen and from what clients do, they do get into that. Now, from the crypto space, again, even if you put into crypto ISAs, or even if you were to just go into crypto itself, well, it's still risky in the sense of you don't know where the price of Bitcoin is going to go up. You don't know if it's going to go down. So, putting all of your money into crypto can be a thing if you want to take if you see a lot of good benefit to doing it, because certainly from a tax perspective, I mean, you can put your money into crypto, and if you're making capital gains, well, it's only when you start making serious money is when you start getting taxed on it. And but the thing with that is, if you're not trading, it does make it difficult from a tax perspective, in the sense of that from a capital gains, which is most people, there's not as much that you can do to actually save your tax in regards to, you can offset losses. So you can offset your losses from stocks and shares. You can put that against your capital, but you can offset any losses from other cryptocurrency that you've made over the year. You can offset that against your gains. But the main thing is more, around the strategy of looking at what you're investing in, and then deciding, well, maybe you sell some of your crypto to make a loss so you can offset that against your gain. But if you're doing it more as an individual on an income level, and so you're a trader, well, there's a lot more that you can do. That's where you can get involved in crypto. You can put your money and investment into crypto. Let's say you start trading. Certainly from a tax side, there's a lot more that you can do. You can, as I mentioned before, you can do things like business expenses, and you can offset the money that you make from there against your put through business expenses if it's relating to trading. So again, it just all comes back to risk appetite. How much of an appetite does someone have to take risks because of the volatility in crypto? And if they do, then they could get into it. They've just got to be aware of the high risk, high reward.
It's funny, Simon, that we talk about crypto in relation to risk, and we talk about crypto in relation to essentially a thing that you buy. It is an interesting one when you compare to things like trading, and we love a good mindset conversation on this one. But when do you think, or do you think that crypto as an entity will just become a part of the furniture, if you like? If we get paid in crypto, we buy stuff in crypto. Do you see that coming?
It's certainly something that, there's two ways I think this can go. On one side, you've got, as I mentioned, you've got places like El Salvador, which have really opened up to the idea of crypto and Bitcoin and making it their legal tender. And then you've got, on the other side, you've got places like India and China, which were banning cryptocurrency. And it's from my perspective, I see that there could be a lot of potential with cryptocurrency, in the sense that, the whole idea of why crypto was created to begin with was because of the trust that back in 2008, 2009, people were getting into cryptocurrency and getting into the decentralized market because they wanted that with the Lehman Brothers collapse and banks, getting bailout, people were feeling a little bit less uncomfortable with where their money was going and who was looking after their money. So it's going to be, well, what will happen going forward? Well, it's really, I'd say, how the market take it. I'd say it's where did the market feel that, where do they want to put their money? Do they maintain faith in the governments? Now, especially with in the UK, that inflation is increasing to as highest level since the 90s. That your value of your Great British Pound and US dollar is suddenly declining. So for some people, they might look at that as, well, I want something that's alternate. Can I have an alternate form of currency that I can still use to pay for my coffee, buy a house, or buy whatever asset it is? And for some people who see that and go, well, I'm not making any money because inflation is wiping out any increase in salary that I've made this year. Or if you're a business owner, well, you can get hard hit by that as well. Well, maybe cryptocurrency is the way because at least it's not as impacted in the inflation as much, and it could be something that people could be well open up to.
And do you think partnerships would have a big impact on that, Simon? By partnerships, I mean things like the big corporations that we deal with on a day-to-day basis regarding e-commerce.
Well, certainly, I mean, we've seen companies that have now been a lot more welcoming of crypto. I believe that some of the football clubs like Arsenal and PSG, they were allowing people to pay for things using cryptocurrency. And certainly with things like smart contracts and that side of the blockchain space, as opposed to just a cryptocurrency, but actually as an actual use for something, while things like smart contracts could get people interested. They might go, as that perhaps takes off, people might go, oh, wow, suddenly this is more interesting. And certainly it will take the companies to back it, because if you have cryptocurrency but you can't actually spend it, it makes it difficult. But if you've got companies that are more open to it, and they see potential in it, then it could certainly become more mainstream.
Okay. I mean, here's a question for you. What about people who mine crypto? Is that taxable as well?
That is taxable. So
really,
if you do mine, it's seen as income, and you would pay tax on that. And that's one thing as well, is what we were talking about earlier, Nilton, on that. People who are they aware of crypto in the sense of being taxed? Well, even miners, they might go, well, I've made a lot of money through mining Bitcoin, but they still have to pay tax on it. And similarly with things like airdrops. I mean, if you receive airdrops, I mean, depending on what you make the money on. So if it's something that you receive just out of the blue, you just pay capital gains tax on it. But if it's something that you actually have to do something for, well, then you have to pay income tax. And a lot of people don't realize that. And then come the end of the year, and then if they don't declare it, that's where, well, HMRC might come knocking. And then you wake up and go, hold on, maybe I should have looked into this a lot earlier in the year, and I'm not in a nasty tax position where, like one of my clients who ended up with a £200,000 tax bill. Well, if he had come to me earlier, it might have been things we could have done to prevent that happening.
Yeah, I mean, if you don't hear from the HRMC, it's down to the person trading the crypto to actually, put that forward and say, yeah, I've made a significant gain, right? But if they don't, then obviously they're going to end up in a lot of trouble. So, I mean, yeah.
Absolutely. I mean, it is certainly down to the individual to declare their cryptocurrency and the money that they've made on it. Now, legally, if you make money from it, if you are investing, for example, and you make some capital gains, well, if you're making over 12,300, then, or the annual exemption, I should say, then you would need to pay tax. There's a legal obligation to declare that for taxable purposes. Similarly with income, well, if you're making, if it's, you have your personal allowance that can reduce your tax, but even as an income, you have your £1,000 as a trader, you can have that allowance. But then if you're making over 1,000 in income from that, well, again, you need to declare it. So there is that legal obligation. Not declaring it, I mean, that's a whole different matter. That's a whole, that's a whole different area, and it's more, you want to make sure that you're getting your tax affairs right, because, well, if you don't, and you get caught by HMRC, which, you can get caught from HMRC, then you can get into a lot of trouble if you're not declaring it and paying your tax.
Yeah, I mean, I think that boils down to people not being clued up with tax, to be honest with you. I think they get drawn into the fact that you can make, a shed load of money, and they forget about, like I said at the start of the podcast, it's a very grey area for everyone. So I think basically they get drawn into the fact of making serious cash, and then they forget about the legalities of everything. When you do make those gains, they don't factor that in, and that's when they end up in a lot of trouble. So I mean, it boils down to just being savvy and getting the right information, like what you're doing here. So
absolutely, it does come down to you could have probably got away with it more back in 2013 when HMRC, it wasn't really a blip on the radar. But now with things like NFTs coming up, where people are making, I recently read the highest, there was a painting that went for $69 million. It was an NFT painting that went for $69 million. It was worth more than a Picasso and a Van Gogh. So if people are making some serious money through that, well, now more people are interested, more people are getting involved in it. You had the spaces like NFTs, DeFi, altcoins, all of this area that now HMRC are more clued into it. Well, now if you were to go down that route of not declaring your tax, there's now not as much of an excuse that you have that you don't know about it. I mean, this is at a point where HMRC are now sending out letters to people and going, well, you might have to pay tax on this and you need to be aware of it. And so people certainly now there's not as much of an excuse, because HMRC have guidance out there, and you have cryptocurrency accountants out there, and there's all that guidance out there that people should be aware of, that now it's going to be very difficult for you to argue that, plead the fifth and argue, well, I didn't know. It's like, well, there's guidance out there and this that you should be aware of, that you now need to, and especially if you get a letter through the post from HMRC that go, well, you need to, you might need to pay tax, that you should start looking at that, because you don't want to be in a position where HMRC start looking into you and going, well, you haven't declared your tax. Well, that's bordering on tax evasion, and now you can get into a lot of trouble, and you don't want to be in that position.
Yeah, exactly. I mean, I'm guessing any client that you get, you're advising them straight away to read up and get some knowledge, right?
Yeah, I mean, I have my as Dave mentioned to before, I have my LinkedIn posts where I post regularly. I post once a day on all tax, not just crypto, but all tax, and especially with the crypto. I mean, I wrote a tax guide that I have, which goes into details about capital gains and income tax, and it's really just it's everything that a beginner needs to know when it comes to crypto tax and what to do. And so I wrote that for clients, and I wrote that for really everyone who wants to improve their knowledge on crypto tax. Well, that's what I did to help people to get understanding, because I know that there's a lot of can be very confusing, and it's like, well, I don't know where to go. So I'm doing what I can to help. I do to help people get more awareness over.
It's such an interesting time, isn't it, when we're talking about the tax of crypto now, when we've talked about it being such a grey area, and the rules around crypto tax possibly changing. It feels like we haven't quite nailed down. We, as in HMRC or the governments, haven't quite nailed down what they want to do. They just know we have to pay a tax on something, but we're not quite sure about what that is yet.
Yeah. It's still they're trying to figure out, well, what are we taxing, and how do we go about taxing cryptocurrency? Again, because there's no regulation, and it's this decentralized currency that there's no one body that owns you own your crypto, everyone else owns crypto, and it's all very decentralized. And it's like, well, who do we go after? How do we tax it? Yes, there's a lot of, they're still figuring things out.
Do you think, Simon, that it'll never become a standard set of rules because of the variation around the things like the decentralization, around the things like the mining, and the fact that there's a new coin pops up every 30 seconds? Do you think that's going to cause problems for the government?
Well, certainly they're certainly getting more advanced into tax with cryptocurrency, especially, I mean, if you look at the IRS, they're very much hot on, so the US tax inland revenue, they're certainly a lot more hot on cryptocurrency, and they're more clued up about it. HMRC is, we can see over the next 5 years that they're going to be they'll come up with more systems, they'll have more technology that will see being more clued up about how they're going to go about taxing things and have a lot clearer idea. I mean, even now you've got things like Coinly, which is and you have Crypto Tracker, where it puts together tax reports that we didn't have when cryptocurrency began. So you can see that, companies are getting more involved in it. I mean, you now have the likes of Revolut and Monzo and Sterling, all these online banks that are now accepting cryptocurrency. And from there, that as that becomes more mainstream, I'd certainly say that the government are going to be they're going to have more of an idea of what to do with it. Certainly as more people, as it gets more accepted, they'll have more of an idea of how to tax it. I mean, they have an idea at the moment. It will be now a case of refining the system, refining how they want to tax cryptocurrency, because they've got to make a decision. I mean, you take income tax. I mean, that started out where they decided at some point we're going to tax it in some way, and they will make that decision with cryptocurrency. That they will decide. I mean, they're already doing it. They're going, well, if you have a capital gain, I mean, they've recently published some NFT guidance. They're talking about, now with cryptocurrency, they're going, well, if you're investing in it and you make money, you make more money than if you sell it for more than you bought it for. Well, now it's capital gain. Now you have to pay tax on that. So they're becoming a lot more clearer, and it will become more clearer over the years. Yeah,
I think it's worth noting. I mean, probably just to point out that I don't have a problem with tax at all. I don't have a problem with paying tax. I think tax it's a good thing if it's used right. When it's used right, I don't see the problem with the tax side of things. But you've touched on this point previously, where we, as individuals and businesses, we try and make our tax life more efficient. I'd just love to live in this really it's blue sky thinking, a bit of a perfect world where we have a tax level and we pay for it, and it goes to good areas of the country where the money's needed. I don't think we should have the need for this game where we have to outthink the opponent, if you like. Not that I don't understand the benefits of it. I would just love to see us in a position where we have a tax level, we all make money, we all benefit from it, and it's fed back into the country, and good things are done. But hey, that's we can be dream.
Yeah, I mean, I get, because one of the things that I get from clients and people who ask me, I get it a lot is, well, I'm making money through crypto, I'm making money through my business. What if I just move to Dubai, not pay any tax? Because that's something you go, well, if I just move to Dubai, then I don't need to pay any tax. And for me, it's like, well, would you enjoy the life? Can you afford the life? Because it's not cheap to live out in Dubai. You can go to a restaurant and you can easily spend $2,000 a night on a dinner in Dubai. And so for people who go, well, I just don't want to pay any tax. Well, you've also got to consider, well, how would the government pay for, how are you going to have the NHS? How are you going to have your police and the army and this? You can't.
Yeah,
it's a very different.
Exactly.
It's very different to places like Dubai, which yes, and places like the tax havens in regards to what they call the tax havens, the Barbados, the Bahamas, and the Cayman Islands, and places like that. Well, it's a very different. It's a different culture. It's a different dynamic. It's different. There's a lot more money going through the country, which they don't have to the same extent in places like the UK. And so the UK, they rely on their tax to be able to, for you to be able to afford your police and to afford your NHS. And if no one paid tax, well, then you wouldn't have that. And well, that becomes an issue. Now, yes, there's ways. Yes, people do feel that they pay too much tax, and I can understand that, especially with the government introducing an extra the health levy or extra 1.25% on national insurance contributions that just come in last week. So I can feel that people would go, well, I'm paying too much tax, I want to reduce it, especially when you've got all the other costs that you've got, rising inflation, you've got rising petrol prices, you've got gas prices have increased, all of this, that on top of an increasing tax burden, people are going to really feel it in their pockets. So this is where, there's some things that it can be difficult to deal with, like inflation. There's not much that you can really do there from a personal level. And, cutting out some foods to buy other foods, well, you may not want to do that just from your lifestyle. And you go, well, there's things that you can do, like you can reduce your tax bill. And whilst it may not feel like you're making money, but if you can reduce your tax bill, that instead of paying £10,000 in tax, £20,000 in tax, you pay 10,000, you pay 5,000, or you pay 10,000, you save yourself £10,000 in tax. Well, that's money now back in your pocket that you didn't have before. And so it's something that people don't think about. It's like, well, if you actually looked at reducing your tax bill, especially if you're a business owner in cryptocurrency, business owner in general, well, it could be like getting extra money in your pocket that you now didn't have before. And that can feel like a win when the cost of living is ever increasing every year in the UK. At least if you can reduce your tax bill, get a bit more back in your pocket, that can certainly help with having the life that you want to be living.
Yeah, we could probably talk for hours on this. Just as a final one from me, do you have any pointers, Simon, for anybody who is thinking about sort of starting out in crypto or wanting to learn a bit more about the services that you provide?
Certainly, in terms of getting started with crypto, it's certainly worth, from my perspective. And I'm not saying this as it is my business in terms of helping people to save on their taxes. It's more from seeing some of my clients who've made a lot of money through crypto, but then they face a high tax bill, and it's like, well, even if you don't think that you're gonna, even if you're not making a significant amount of money to begin with, it's still worth having that initial conversation with a tax accountant. Specifically in crypto, if your accountant, have an accountant who knows about crypto, that you can have that initial conversation just so that you can prepare yourself, that you don't put yourself in a position where suddenly a few months down the line, a year down the line, you suddenly got a high tax bill. Whilst a lot of people might go, well, I'll deal with it at some point in the future. Well, if you had actually sorted it out to begin with, you don't have to be left in that position. And if you can minimize your taxes and you can do that, then that's always a good thing, because then you have more money back in your pocket. And additionally, it's also, if you're dealing in cryptocurrency, you might have other income, and even if you don't, you might have some expenses. You might have other projects getting on, and there's going to be ways that there's certain accountants who look at your money, look at how can you help increase the money that you're making. It's one of the things that I do with my clients, is I look to see, well, can I help them increase their income? if you're a business owner, can I help you increase your income to reduce your expenses so you have that double, in a way, a double win of increasing your income and reducing your expenses so you have even more cash in your pocket. So having that initial conversation with a crypto tax accountant would certainly be something I'd be recommending to people. And in addition to that, I mean, I wrote a crypto tax guide that's freely available for people to download. They can access it through my website, that people can get that basic beginner understanding of cryptocurrency, and specifically in relation to the tax, where they can understand, well, what is the capital gains implications? What is the income tax implications of really what happens in terms of tax from holding cryptocurrency? So certainly from that side, that's, as I say, it's a free resource that I have that people can download from my website, and then they can read up about it, and then that at least gives them a basic understanding of crypto before they have a conversation with an accountant about their more specific situation.
Good stuff. Unfortunately, Simon, we've run out of time, mate. But I've got to say that was a really insightful podcast. I think the listeners are going to really enjoy listening to that. I got a lot out of it. I know you did, Dave.
Yeah.
So yeah, thank you for coming on the show, buddy. Really appreciate that. Just want to say to any of the listeners, if you like to hear more of shows like this where we speak to subject matter experts, please subscribe. We'll put Simon's details of his website in the description. And yeah, once again, buddy, thank you for coming on the show. It's been really great to speak to you. Dave, have you got anything else to say?
Just that I'll probably end up one of Simon's client lists before long.
I suppose the $1 million question, Simon, before we wrap up is there any way to avoid paying tax with crypto? That's a joke. That's a joke, buddy. All right, listen, guys, thanks very much. Simon, it was a pleasure. And yeah, thanks for listening. Bye-bye.
Thanks,
Bye-bye.
everyone.
Thanks for having me.
Bye.